GAP gap, EPS beat of 2 cents, revenue misses. What else we got here? What up, everybody? I got a live chat. I got a live chat. And let me do this here. No, I don't want that.
Revenue at $876 million, up 33% from a year earlier. The street consensus was $237 million. We're also seeing a beat on GMA.
Papu, how are you, Papu? Mr. Dan, how are you? Oh, you got a firm out too. Oh, firm's up. What happened here to my keyboard? Hold on. And didn't Irene report up a little bit? All right, hang on 1 second. We'll get going. Filters. You put a cap on this coffee before the bottle. What else? I gotta meet this guy here. God, the preparation for a webinar takes a toll on me. I gotta mute everything. I gotta go to a different format. Okay. I got to put in a college football bet. Game starts at 5:30. There's a lot going on here. All right. Any earnings worth talking about? I mean, Irene looks up a little bit. This thing's been on fire anyway. Dell, where's that down to? Probably find some buyers there. Oh, and a firm. You got Baba late night tonight. Firm, nice pop. Yeah, firm's been cooking. Well, let me get some of these things off my chart. Oh, that's off already? I got a different chart up here. That's why. Looks weird. You got a nice pop out of a firm. I don't know what the implied move for a firm must be big though. All right, let's get rolling. What I usually do, because again, especially in the summer, a lot of people watch this on recording. I'm going to get through all the fat, kind of run through an update of things we look at on this webinar each and every week. Share with you guys what I'm doing about what we're looking at, what type of action I'm taking, and then you take that information and do what you like, right? So again, these are a lot of the makeup of some of the key signals that I pay attention to, that we pay attention to in the steam room. And again, each and every one of us run a different book. Some of you guys have clients. Some of you guys run personal money. Some of you guys have small accounts. You're just starting. Some of you guys are more experienced. So everybody's action of what they see could be completely different. Okay, so you take the information. I try to interpret it for you guys to give you guys an idea of how I'm approaching it, what I'm doing about it, and then you guys do as you feel, right? All right. So what's been interesting, and again, I you got new people on the webinar, so I try to get everybody caught up. But what's been interesting of recent, we're starting to see internally a different message out of the market. And what I mean by that, and we saw it again today, and I figured I'd lead off with this because it's kind of important. When money is rotating into the AI names that everybody knows about, mega cap tech, right? So I refer to them as the crowded trade in the sense, even though there are periods when they pull back, they're less crowded than they were. But a lot of the money that anybody who's bullish on these names already more than likely owns them, okay, and owns a lot of them. So these areas have been crowded more than not, especially over recent months. And anytime we see money rotate into those type of names, like we did today, the market sends a different message out than what we are more accustomed to seeing. It sends almost a defensive message, okay, not a risk-on message. And I'll talk a little bit about that as we go into some of the signals and indicators. But when the market rotates out of those names and goes into everything else, basically, right, from cyclicals to small caps to even the more speculative stuff, all right, names, again, that are not crowded, that's where you see more risk on from a lot of the signals that we like to look at. Okay, so I think it tells us a lot. I think what it means is that for this market to kind of remain healthy, at least for now, we need to see more of that rotation out of the crowded stuff to have this market continue to do what it's doing and remain healthy, right? The more or the less we see of that, the more we see of money pouring into those same crowded names, okay? The names, again, everybody's talking about. I think the more risk that builds, if that makes any sense, okay? So example today, let's take just the sweeper activity, right? One of the more important signals for me. Flow is kind of mixed. You look at kind of, we have a couple of things in the room, simple stuff you see all over the place. Where is it? I got to go here. Hold on. How do I get it on this screen? Oh, here, right? Where is it though? It's not on here. Anyway, just simple measures that show us sweeper activity, what the percentage of call buyers to put buyers, right? The percentage of sweeper activity, bullish to bearish, I think was net bearish today, right? And today we saw the kind of the main indexes that everybody follows, the S&P 500 and NASDAQ, strong, right? But the flow, again, specifically sweeper activity, kind of gave us a different message. Okay. And earlier this week, Monday, Tuesday, Wednesday, the indexes were kind of quiet. You look on social media, anybody trading the indexes was complaining about the lack of action. But underneath the hood, sweeper activity was extremely bullish. And the price action in a lot of names, the momentum in a lot of names was extremely bullish. Right? So that's kind of what we've been seeing of late. And not only what we're seeing, but what the market interprets as more of risk on posturing or more of kind of a defensive or concerning posturing and positioning in the market. Okay. That hasn't been the case in the past. Right. In other words, what would be different and what we would normally see prior to the, let's say the April correction, we would see these mega cap tech names, AI names, right? The NVIDIAs of the world, and even kind of those other tech names that aren't as big market cap, but AI related that have been hot. When money rotates into those type of names, what we would see in the past is that's where we would see risk on signals. Right? That's where sweeper activity was most aggressive. That's where a lot of the signals we pay attention to, from the credit markets to anything, would signal a healthier risk on backdrop. Okay. Now we're seeing something different. And I think that's really, really interesting, a change in the market that we really haven't seen up until now. All right. So that being said, I thought it was probably the most important thing to lead off this week in the webinar, because I think, again, not that my opinion, but I think what the market's kind of telling us is that if we don't see a continuation of the rest of the market, right, cyclicals or even other AI pockets that just aren't in these crowded areas, if we don't see more of that, the less we see of that, the more concerned we should become, right? And a lot of the signals we pay attention to will start to flash pretty bright caution signals if it goes that way, right? On the flip side, if we continue to see what we've been seeing, and that's a healthy rotation into the other areas of the market, and they start to get more attention, we start to see more breakouts, we start to see new names catch sweeper activity, right? All that comes with it. Even though the indexes may not benefit as much as that's going on, what the message our signals are giving to us is that we can find some longevity in that, right? It's healthier for the actual market to do that. And it makes sense too, because what you see is when you see that rotation into the other areas, that's where sentiment is in check, right? You don't get that kind of euphoria, the frenzy that you usually see when some of these crowded areas are doing well. So it makes a lot of sense, but it's something to keep a close eye on here going forward. And I think will give us a lot of information as time goes on to what we can expect going into the fall. Okay. That being said, kind of rewind here, catch everybody up to date to where things have been at. We kind of been talking about where obviously we don't have the tailwind and as bullish a backdrop as we had coming out of that April correction, right? So you kind of had max bull, if you want to put it that way, max bull tailwind coming out of the correction. And as things mature, more players, more investors, more traders flip from bearish to bullish and everything that comes with it. And you start to lose that backdrop, right? So that being said, that has obviously happened. This market's come a long way. I mean, we're up a good amount from the lows. We haven't reached that point where you kind of got everybody all the way to the other side of the boat yet. All right. There's still been pieces or pockets of the market where bears can still be entertained, right? Still be involved. And we talked about even bulls, right? They found kind of a new niche trade, a new gimmick where they can buy these strong, crowded AI-related names and pockets that they already own. And while they continue to hold these areas, they can short other parts of the market that haven't participated. So they kind of had this, a nice little hedge to remain bullish. I'm talking about even bulls now, okay? That was the big pain trade coming into the last few weeks, right? We talked about that. It's primarily even the small caps moving higher, or should say small caps outperforming some of the larger market, right? So if you want to see it in kind of chart form, and those of you in the Steam Room probably should be familiar with it already because I posted it a million times, but something that looks like this in a sense. Okay, this is just QQQ versus IWM. And, you've had a pretty healthy move. And this here is kind of what brings pain to the current positioning. If you want to know, right, what's the pain trade out there, right? A lot of times it's just the market moving higher because everybody is bearish, short, or doesn't have exposure. Or when everybody's bullish, the pain trade is lower, right? Because everybody's already long. The current pain trade, in my opinion, over the last few weeks has been this, right? Because again, not only bears were finding things to short and have already been short a lot of these things, even bulls were short this area, okay? So what we've seen is kind of an unwind of that. And, right, you see it in simply IWM as well over the last few weeks. And those of you who have been around the webinar and in the Steam Room know a lot of us have been bullish IWM because of that, right? If before we can get a correction that we are fearful about, something that we really don't want to hold weight through, right? You don't want to hold too much long exposure through. Before we can entertain the thought of that occurring, there likely has to be a squeeze in the biggest short out there, right? And that's this area of the market. So what we're seeing right in front of our eyes happen now is we're seeing that area, that trade unwind, right? And without anybody even realizing, well, they're starting to talk about it now, but IWM has outperformed this month as a whole, okay? So that was kind of, if you guys remember, for me now, talking personally before we dive into the signals so you can see them for yourselves. For me, everything stemmed around this trade, right? I had an IWM TNA trade, which you guys know about. That's kind of what was my big position, and everything stemmed around that, right? So in other words, I felt like I could still be bullish, right? Even though I don't want to be as sloppy on the bullish side because we lost some of that tailwind, but I could still be bullish in a prudent way until this unwinds, right? Until this kind of, my long trade there hatches. And then as that occurs, that's where I would need to reevaluate and see if there's any concern out there, okay? So what I've personally done, I haven't done anything. I've just been sitting in that IWM exposure and trading other stuff around it. But this week, I actually took action, which I mentioned to you guys. Had IWM got to those highs, that's when I would entertain selling my TNA and moving some of that money into longer dated IWM calls. That was kind of my next step, right? Not to get out of the exposure completely, right? But to start to take action there, right? Take some principal risk off the table, lock in some profits, and still have some exposure because I want to be long of this longer term. I don't want to get out of this trade completely, but I want to be smart about it as well. Okay. So I took some action there where I sold some of my TNA and I moved some of that money into IWM March calls. I went out to March, right? And I'm more than likely going to move that out eventually as well, regardless, right? Because again, something I want to stay in longer term. So as this, if and when this continues, right, I'm going to do that again with the rest of my TNA. Ultimately, my goal is to lock in the profits on the TNA and whatever I'm willing to risk at that point, longer term, have it in IWM calls. Okay. I'm hoping we get a breakout, right, of IWM, but now I'm more focused on kind of the short exposure there, right? Regardless of whether we see this thing, physically break new highs or not, if shorts get squeezed there, I kind of want to take that action anyway. You know what I mean? Me having a target of new highs wasn't a crystal ball I took out of my rear end, right? It was me figuring that if they get squeezed, it likely will result in new high or a test of new highs, right? So that's where that target even came from. All right. And we get an update on Russell 2000 futures tomorrow. Let me see. Do I have one handy here? Hold on a second. Going into tomorrow, whatever. R2K, do I label it like that? I think I do. Here it is. Okay. So these are hedge fund shorts in just the Russell 2000 futures. Right? So you see this big spike here from April. Right? So I just explained that to you guys, how that started up. You can see an aggressive add of shorts in the Russell 2000 futures. Okay. And a little bit of an unwind up until now. We get another update tomorrow, and we'll see how that looks. Probably, you would think they were squeezed a little bit more, and they take off some of that short exposure, right? So we get an update tomorrow. So as this comes in, right, and they get squeezed out of those shorts, again, I don't know exactly what that means for the Russell 2000 and IWM and TNA, right? But more than likely, it should mean in some more upside, or at least remain up here. Okay, so that's kind of what I'm keeping an eye on here, not only for the trade, but at that point, I think a lot of things change as far as the dynamics of the market, because now you removed kind of the big short exposure out of the picture, and everywhere else is nowhere near as bearish, right? You got actually bullish extreme pockets of the market, which have done well for a while, and there's a lot of long exposure, right? The NASDAQ being one of them, okay? So, but once you remove this, it changes a lot of things that we like to pay attention to. One specifically, Sharpies, again, commercial hedgers, dealers, and they have several aliases. They will no longer be where they're at right now, more than likely, right? They will likely be net hedged at that point as hedge funds get squeezed out of this short. Okay, so that's why I feel like it's really, really important. All right. So that being said, that's what I got going on now, right? Around that, I've been a lot more selective. Okay, going forward, what I'm looking for kind of anything that fits that rotation bill, right? So anything that's any new aggressive sweeper activity in a cyclical name that I like at a decent spot, a small cap name at a decent spot, I'm still willing to participate here. All right, that's where I'm at now as far as putting on any long exposure. All right, but so at the same time, while I'm doing that, I'm looking to trim the stuff that I've been long of, right? I think that's the big change for me. A month or two ago, I was willing to sit in long exposure, let it marinate, right? Be patient. Now I think that's the big change for me, where time frame more than anything else, right? I'm looking to be more of a trader here, if that makes any sense, but selectively. All right. I don't want to be as aggressive buying, existing names, right? Like example, we continue to see flow in a name like this. If this is the only name catching flow, I'm not buying BE up here again, right? So I'm looking for new areas, new pockets of the market that may be attracting new buying, and that's where I'm looking for trades, right? On some of these, and we talked about this on the Sunday webinar, I think it was this Sunday or maybe the Sunday prior. What was good about the way the market was laid out, this rotation that we've been seeing, this back and forth rotation, right? Kind of the indexes got stuck and we would see back and forth rotation. What it allowed price action wise and setup wise is you would have names, even though they were hot names and have been up significantly, they were all pullbacks, right? So we were making the point that if you do see repeat buying come into like an OCLO and it's down here off a pullback, you have a trade here, right? If you like it, right? If you like the name, you have a trade there. The thing that I definitely would try to avoid is buying an OCLO here and holding and taking the risk for a run like this at this point, right? That's what I'm not doing. That's what I'm trying to avoid totally, right? So I'm willing to pull the trigger and fire and take a trade at a decent spot or consolidation or a pullback if there's aggressive buying that comes in. But where in the past I would sit and let it mature in a sense, right? Now I want to be more nimble, and I want to take that profit when it's there. Okay, so that's the big change for me. My goal is to get a lot lighter from here, right? So I'm not looking to add weight exposure wise. I'm looking to trim my exposure, even if it may be gradually, right? Because here's how I look at it. If I'm lightening up with the stuff I've been sitting in, okay, the only way I'm putting weight back on is if I'm seeing aggressive sweeper buying in new names at solid risk reward spots, right? If I'm not seeing that, my exposure weight will be going down. Right? And that's exactly what I needed to do if we're not seeing new action and new setups, right? Because the risk of a correction goes up significantly when we start to see that. Okay, so that's where I'm at, and the reason I'm there is part of it's from the positioning aspect of things with IWM, but some of these other things that we look at as well, right? So here's some of the more popular things we look at. These are the credit market signals. Okay, they've been pretty quiet up until recently. We haven't really seen much of anything. Kind of been risk on mode. They've been at record tights and confirming upside, but a little different wrinkle recently where they kind of stalled out in a sense, right? So these credit spreads and swaps have gotten to a point where they're so tight, right, at record tights, that they're not tightening anymore, right? They're not tightening any further. Now, what we want to keep an eye on is if they start to widen out, because if the market, even though, again, the price action means nothing to me, guys, okay? That's one thing, and from all this stuff I learned early on in my career. The price action, like a lot of people say only price matters. For me, it's the total opposite. I'm not going to lie to you. It's the total opposite. Okay. The price action means nothing to me. The market could be going parabolic for all I care. That shouldn't determine whether I'm getting more long or more cautious. Right? For me, it's the sweeper activity and sentiment and positioning. The price action means nothing to me. Right? You guys know it can be bearish as all, put whatever for word you want there, right? It could be as bearish as all fuck out there. And the world could be coming to an end. But if everybody's bearish and everybody's short and nobody is long as shit, right? We've seen major bottoms there. So I can't allow that price action to scare me out of that opportunity, right? And on the flip side, the market could be going up every day and everybody's doing cartwheels all over social media and whatever the case may be. But if we're seeing that everybody's already long, right, and we get into frenzy where call buying gets out of control and you're seeing nothing but euphoria, I don't care that price continues to go higher. I don't want to be buying into that. That's the last thing I want to do. Right? I want to be doing quite the opposite of that and taking down my risk significantly. So the old adage, it sounds, these slogans, right, you see thrown around, especially social media, they sound cool, Oh, yeah, that experienced trader, only price matters to him. But what it means, it's useless. It's useless to me anyway, right? So that being said, even if the equity markets are continuing higher, but I'm starting to see these credit signals signal the opposite, right? That becomes a problem. And the more I see of that, the more I want to cut my weight down completely. And I don't mind being in old cash, even if the market continues higher. Okay. So you got a little wrinkle here where equity markets continue to grind higher, but the credit market signals aren't confirming that. All right. Now, it's a short, we're talking about a small sample size here. We're just starting to see that. Okay. This can get resolved tomorrow, next week. But if this continues, and the longer it continues, the more of a problem it will bring. Okay. So that's one thing we're seeing, right? Credit spreads, you're just starting to see that now, right? See kind of the market continue higher and credit spreads starting to bend a little bit. Nothing major, okay? But possibly the start of that. You got this that's building, all right? This is VIX futures positioning. All right, now, while VIX continues to sell off, equities continue higher, you got a pretty hefty short position building up in VIX futures. Again, all fine and dandy as long as equities continue higher and VIX continues to melt. But as soon as there's a catalyst to flip all that, that's how you get Volmageddon. All right? So again, this is something, can it continue? Of course it can continue. You can see back here into the 2022 bear market, it got even more extreme. All right? But something I want to keep an eye on, a close eye on, as shorts get squeezed out of the rest of the shit out there, right? So again, I'm showing you all these things to kind of justify what I explained to you, the action I'm taking for myself, for my account. All right? Again, it's not a hunch. I'm not talking to my buddies on Twitter to come up with kind of my thesis. It's all based on what I'm showing you guys. Here are VIX, the positioning in VIX futures, right? So even though Sharpies, commercial hedgers, dealers are not hedged in equity futures yet, at the same time, they've been building exposure in VIX futures because of the other side of that position, all right? So again, you squeeze kind of the Russell, you get those shorts out, and now you got Sharpies putting on hedges and equities, and they're at a long extreme in VIX. You got the setup for a problem, right? Correlation. You've heard me talk about this in the past. Matter of fact, if you guys were around before the correction in March, we were talking about this a lot in February. And the reason why we were talking about it, we kind of were lingering down here at really low levels. Okay. And that can occur and that can linger for a while, right? You get these mini pops, which if you overlay VIX with correlation, they pretty much look exactly alike these days. Okay. So think of it, you get these mini pops in VIX, but they sell that pop immediately, right? So that's kind of what you first get before you get that buildup, and then you get a violent spike in correlation, which brings with it a violent spike in VIX and an equity market drawdown. And that's kind of what we saw, right? What we were seeing in February that got us concerned, along with everything else. And then you get kind of that big spike, which ultimately brings some nice bullishness after that runs out, right? Okay, but we're right here right now. Okay, so we're back at low levels and lingering down there. Again, if you remember, for those of you who were around, as we were unwinding from up here, that's what made us feel pretty, we had some conviction about it. We had a long runway. Right? We had a long runway. We were at a sweet spot. Because once that correlation spikes, and then you get the unwind of that, that's where you get that big tailwind, where 9 out of 10 stocks you're looking at off sweeper activity are going higher. Okay? Now it's a different picture, right? We're at lower levels. What is this now? Oh, I'm back to the front here. Yeah. Okay. What we're looking at here. Oh, these are Sharpies. Okay. These are Sharpies net exposure Sharpies combined in equity index futures. So all of them. And you can see they're kind of hugging the zero line. Right? What, again, no reason for concern. This actually makes me feel pretty good about dips being short-lived. Because the rationale is, if you get a pullback, okay, what's going to happen to the short exposure that's out there right now? They're likely add to it, right? And they're already extreme. Like the Russell, you'll get even more shorts if you had a pullback in markets, right? So that doesn't make it bearish. That makes it even more bullish to me, okay? But once that unwinds, what you're likely going to see is you're going to likely see this indicator, this exposure line, start to creep down. And what that's telling you is now Sharpies are adding hedges on in futures. Okay. Again, this is not an instant top signal, but that doesn't matter to me. I'm not trying to nail the highs, right? I'm trying to get out of the way with as little weight as possible. So I have, one, the ammo to buy that pullback when it runs its course, and two, not to give back all the money I made on the way up, more importantly. Okay, so I don't mind it being early like it was here for a couple months. But if Sharpies are maxed hedged, and I start to see from those other signals, they start to flash concern, the number one thing, my most important thing, is that I don't want to be adding on weight in my account. All right. So again, once the small caps that trade gets completely unwound, it'll be interesting to see where this is at, because a lot of the long exposure from Sharpies are in small caps. Sharpies are, well, they're not anymore now, but up until a week ago, we're at a long extreme in Russell 2000 futures. Okay, that's where all the long exposure was for them. They're already hedged in NASDAQ and they're neutral in S&P 500. What happened here? I chopped it off. CTAs, right? Again, you don't hear me really talk about them too much right now. Okay, a lot of, especially the bears on Twitter and X, whatever they're called. They see CTAs max long, and you'll see them start pounding the table. Oh, the market, blah, blah. That's not a sell signal, right? CTAs, that's where they pick up the money. They get max long, they sit long, and when they catch a trend, that's where they find their most success. Otherwise, they'd be out of business. They'd be extinct. There'll be no need for them to run these CTA models, okay? But what happens is, once they get to a max exposure, right, number one, they're not, that tailwind from their buying, which we've all seen, there's enough proof that that's a big tailwind, right? When they're buying aggressively, that's gone, right? So that big tailwind that pushes the indexes higher is gone. That's one. And two, as they sit max long, okay, when that time comes, when the momentum starts to shift to the downside, and now the S&P starts cracking levels to the downside, VIX starts cracking levels to the upside, that's when they start to take those exposure levels down, right? And that supply, just like the demand on the way up, we saw the impact. You see that supply have an impact on the way down, right? So what I'm showing here is that even though they're maximum now, the levels that where these funds start to trim that exposure, there's room, right? So in other words, you got again, let's say here. 6,500, okay, ES, where they start reducing longs. This was coming into the week. It's 62.60. Well, for the market, ES has some wiggle room there, right? The ES can trim 50, 80 points, and it doesn't affect them one bit. But what you'll start to notice is as the market kind of chops and grinds higher, okay, these levels will move higher with it, and they start to tighten that gap, right? And then what you see is you'll see some consolidation in the price action, and then you'll see once we bend and you start to see a sell-off in ES, then you get that level crack, and they start reducing levels. Now, again, there are levels to the downside, right? First, they trim exposure, then they get neutral, and then they get max short, right? So that's what this is showing you here. Okay, they reduce their longs, call it 6,300. They flip short at 6,100. They get max short at 5,900. At that point, you probably see ES at 5,700 or 50, right? So that's kind of the setup there. All right, so this is already, the reason I bring it up now is it's been filed, right? This has already signaled, it's been filed. It will be a problem at some point, but not yet. Okay, but it's already there. You're not waiting for this anymore. And this is from Bova, right? So each and every model, whatever house it's coming from, they got different models, they have different levels. They're in the ballpark of each other, but they just have different levels. All right, so this is kind of showing it on our chart form. But pretty much same thing, 63, 6,200, that's where they start selling, long unwind. Okay. And here's DB's big picture indicator, right? This takes a lot of sentiment, a lot of positioning, throws it all into one indicator. And you get a nice quick synopsis on everything, right? An average of everything. Again, we come off bull signal in April. Markets come a long way, and again, you like perma bulls, or how about this? That's the wrong label. Bulls who need a lot more upside or want a lot more upside because they're long, they look at this and say, "Oh, you know what? We got some decent room here. We don't really have to get. We don't need to be cautious or look at our risk. Yeah, we got some decent room." Which that's not really prudent, is it? Right? What you want to see is, okay, you got a little room here. What's everything else look like? So if I'm starting to see caution signals flash in the credit markets, right? The Russell short unwind, all these things that I look at, if they're already starting to flash caution and this is here, what am I going to do? I'm still going to remain all in because this technically didn't get to the highs in February, right? That doesn't make sense. Okay, to me, my takeaway is that we had an extreme bull signal. We've come a long way from it. Right? Now you got to start paying attention to everything else here. All right, this is not a luxury anymore. Okay, you have a little room, but that doesn't mean a correction can't start if you're getting warning signals from everywhere else. All right, so you kind of want to look at everything in its entirety. And this is still, again, this is a survey. A lot of politics have been playing a big part in this, but this is still pretty bearish, or not bullish, I guess is a better way to put it. But this is the AAII sentiment survey every week, and every time you see kind of the the popular names, the hot niche names of the world kind of consolidate or pull back a little bit, you see these measures crater this survey. But as they firm up, like next week, you'll probably see a decent bump higher next week again. All right. We were down to 30, 29 and 30. You would think the market crashed. But now, as some of those names have firmed up again, the NVIDIAs of the world, you see this start to creep higher. All right. But it can happen fast, you know, it can happen fast. This thing, again, doesn't have to technically get to sell time. This as a sell signal is not very efficient. I'll be dead honest with you. It's much better as a buy signal, like most of these indicators, you know. So I wouldn't rely on this solely by no means. Okay, but still not signaling right any euphoria out of there yet, which certainly could be with the market where it's at. And the last thing I think I pushed here was hedge funds in single names. All right, so you can see, hey, again, they haven't been doing much at all. They haven't been doing much at all. But again, you got to understand where hedge funds have been at, right? They've been long a lot of the mega cap NASDAQ AI related names, and they've been short almost everything else, right? Software, one of the most shorted groups out there we talked about. Health, was it healthcare? I don't know if it's healthcare. But, you know, small caps, obviously, a lot of these high multiple stocks, like an Affirm and Roblox and all these names, they've been short. So that's kind of been their hedge funds. But they've been getting squeezed. They've been getting squeezed. All right, but you haven't seen that buy capitulation yet out of hedge funds. And that's good, not only just as a top signal, but even like if everything else is still pointing towards a correction, even if we do get a correction, okay, you have a better shot of hedge funds getting max short a lot quicker than if they were fully long. All right. Like a lot of times when they get aggressively long, that usually is a major top if you see that buy capitulation. Okay, so let's hope we don't see that. All right. So again, in a nutshell, you know, longer term, right, bigger picture wise, I'm still bullish. I'm more bullish in other areas than I am in some of the areas that everybody else is bullish, you know. But what I'm more concerned about is at some point here over the next couple months, you're likely going to run into a correction, right? And again, you kind of want to keep tabs on all this stuff to get a gauge on how violent or how deep of a correction it may lead to. But at the same time, I don't want to just sit here, twiddle my thumbs, and get caught in a correction, right? And, you know, this is something that's been drilled in my head from the early days of being in this game. I told you guys, my biggest hurdle in this game was holding on to profits I made in the bullish times. Okay? Like again, you may look at this as a rain on your parade. We all think we're Stanley Druckenmiller right now. Okay? We all feel like we know where the market's going. We know what stock is the best stock to own. We all had 5 straight winners. We're all there, guys. Okay? Anybody who's been long, we're all there. We're all making money. Nobody's special. Okay? It's hard. It's really difficult to lose money on the long side in the market we've been in right now. Okay? But that doesn't last forever. That doesn't last forever. Even in bull markets, it doesn't last forever. Corrections show up and they take away the bulk of those gains, if not them all, when they show up. That's just the way the game works. All right? So, again, the stuff that I'm showing you guys, these things I pay attention to, yeah, I refer to them as my seatbelt. They're kind of my reality check to keep me in check. All right? It's more about And I'm not, again, I have no pride now. I'm not trying to impress anybody. I'm too old for that. It's not even an age thing. I feel like I'm 80, but I'm not ashamed to admit, like, the market has a lot to do with kind of my performance. The market has a lot to do with it. I'm not ashamed to admit it. I pat myself on the back more so that I've been able to take advantage of it, allow myself to be bullish and take advantage of it. Where you got a lot of people out there who try to outsmart the market, right? We talked about it, get too cute, whether they're shorting or they're whatever trading, right? Trying to get rich overnight, and they end up losing money in these times. I think ultimately you want to allow yourself to be ready when these type of trends come around. You take advantage of them, but more importantly, before that momentum runs out, hold on to at least the bulk of those gains. You don't have to hold on to them all. You can risk some of them for more upside, but the main objective is to hold on to the bulk of them, because it means nothing if when that correction shows up, you give it all back every time. It means nothing. All this means nothing. Zippo. So, people, whether you want to look at it that way or not, people learn the hard way. But if you don't correct that mistake, you're going to spin your wheels. Right? So, again, that has a lot to do with the stuff I look at. Of course, it'd be a lot easier. Just come in, fire up the machines, and be bullish. And, oh, it's fun. Let's buy more. Let's buy more. Hey, up every day. Let's go. Right? Yeah, it would be less stressful, right? Less time consuming. A lot more fun. But it won't be fun when I give back every single freaking dollar I made. So that's why I kind of look at this stuff that I do. Yeah, and it lines up again with seasonally. Okay, it's just this time of year. It's again, you can't. There's no exact reasoning for it. Like some people talk about, fund flows have a lot to do with it. I'm sure they do. But for me, and you guys know I'm very superstitious. There's something about September, October. There's always shit that goes down. Always something that pops up unexpectedly. Right? Yeah, it may be a year where it doesn't. But as soon as you take your eye off the ball and you're like, that doesn't happen, that's bullshit, that next year you run into 9/11. You know what I mean? Like this, 87 crash, October. Like everything happens in that time frame. I have no idea why. No idea. Yeah, you got guys coming back maybe from the holiday. I'm sure it plays a part, right? But it's just, for me, I can't explain it, Max. It's just when and I tell you guys the story, when I was running a book, when I had clients, because you can't be that nimble with clients. Like I would have to call my clients up. All right, listen, we're getting into cash, and then hold their hands every day the market went up and we're still in cash. It wasn't that easy. But what I would do, like clockwork, every year, it didn't matter what I thought. But every year I would get into an elevated position of cash. Every year at the end of August, that was my goal. If nothing happened in September, October, that was fine. But every year I would do it because it wasn't worth getting caught in some sort of cataclysmic event. With clients, forget it. You know what I mean? Disaster. Yeah, a lot of stuff, Sahil. A lot of stuff in that time frame, right? Crazy. Again, I can't explain it. I'm sure there are some factors, like legitimate factors behind it, but I'm talking about like exogenous events too. I'm not talking about market stuff. I'm talking about just, like 9/11, right? It's just crazy stuff. So Struck brings up a good point that seasonally, you're running into that as well, right? So once again, if we start to lose some of these more of these bullish factors that we've been talking about this whole way up, right? And we start seeing some caution signals, and at the same time, you're running into a risky period of time. Well, why be a cowboy, right? And then, too, and guys, again, some people look at it different. For me, it doesn't bother me. Like if the market continues higher and I trimmed my exposure, I'm light, and I got cash because I'm not completely going on vacation or something. Right? I'm still trading. I'm still being more tactical about things. So I'm trying to make money, but just my whole approach is different. You know what I mean? I'm not being as aggressive. I'm not putting as much risk out there. So it doesn't, again, the downside of me missing on a continued melt up, again, I'm not running client money. It's I don't have to answer to anybody. Right? Like all of us here, and again, I'm hoping anyway, we all, I think, could say we had a solid few months these past few months. Right? I got to believe every single one of us. Some may have done better than others. That's, a lot of luck involved. That's irrelevant. We've all had a solid few months these last few months. No matter what type of trader you are. You trade larger names options, you trade smaller names, you're a stock picker. This rally paid everybody on the long side. Right? Everybody. So, we made our dent. We made our dent. So now I'm just more focused on, all right, even if I'm early, there's going to be some sort of correction at some point, and I want to have the ammo to fire when that correction runs its course. And do what we just did, all over again. So me missing on some choppy, grindy, melt up, thinner market that may be, I don't get the FOMO for that. What I get the FOMO is what we just went through. That's what I get FOMO for. When you're seeing, all sorts of things under $20 popping like popcorn, right? You're buying a $5 stock in a week, it's 7, 8, if not in 2 days. That's kind of, that's what I get FOMO for. So that higher probability trade. Gold has been firming up. It's back to the top of this kind of range it's been in. And we'll see if it breaks out here. It's done this a few times. This consolidation has been totally normal for this, coming off this move, huge move. And, I think if you're bullish gold, you got to be pretty impressed with this, I think. Because very easily with the equity market going into risk on mode, you could have seen gold come in more than it has, and it didn't. So it'd be interesting to see here. What's also interesting, again, I'm not a Bitcoin guy, but Bitcoin kind of losing a little steam here. Is that, let me tell you something about Bitcoin, because I criticize the crypto bros a lot. You guys know that. There's some sharp money in Bitcoin. You know what I mean? I'm not talking about the farting guys, what do they call them? Huddle bros. You know what I'm talking about. Bitcoin front runs a lot of shit in this market, both on the upside and downside. So, when Bitcoin's not acting accordingly, I think you need to pay attention, right? Because it's that spec risk appetite out there. So, it's interesting to see how this kind of resolves from here. So there are a few things to keep an eye on. I don't want to get too in the weeds. You understand? But I think that to keep it simple, like I said, that's where kind of I started the webinar off, because you can get really too in the weeds with watching all these things. My number one goal right now is to kind of lighten up existing weight stuff I've been sitting in. Right? And I've been sitting, I got a lot of even smaller positions that I've just been sitting in, not even like big, like the TNA exposure. That's my biggest position. I still got Tesla, the TSLL. You know what I mean? But even around that, I got other positions. I got AES, which kind of was a longer term hold, not longer term, but intermediate term hold for me because it's slower. So I got a lot of this stuff. I got to start to look to clean up early. I can't wait for the last minute. And then the only way I'm adding any new weight is if it's meeting kind of the standards that would be showing me that there's some more runway. Right? And that's kind of the rotation, new name aspect of the market of things. Right. And here's the thing too, guys. Because macro, a lot of the macro stuff we talk about is all opinion, right? So we all give our opinion. But what I can certainly see happening, and you got the Fed in September, okay? If the economic data starts to weaken a bit, you may get kind of this growth scare again, where the market is fearful that the Fed is late, right? And then you start to hear that R word again, recession, okay? That fear will bring down the markets, will weigh on equity, right? I mean, a recession would be a problem. Now, again, I don't think we're getting there. I don't think we're going into a recession. But as we've seen with the tariffs, the fear of that cause a correction. So I can certainly see that happening again, stirring up again. Right? Then you got the other side of that, which I have less belief in, the inflation side of that, right? Where inflation starts to perk up and they're worried about the Fed not doing anything, which would weigh on equities. So you've got things out there to stir up the pot if positioning gets too full. You certainly have it. You certainly have it. So that's again, that's playing a big part in why I'm taking this approach. And each and every one of us, you guys have to weigh what you're doing currently. If you're in one or two positions, right, and you kind of have a hot hand on them, in other words, you can pull the plug rather quickly, and you're not worried about getting caught in a little drawdown, you may want to wait to the last minute if you think it's prudent, right? If you're already light. So it all depends on how each and every one of us are positioned and what we want to do about it. That's why I'd like to share with you guys on what I'm doing, why I'm doing it, and then show you the reasons why, right? The reasons why I'm taking that action. Bitcoin 200,000 with 2 rate cuts. Nothing would shock me at this point. You know what I mean? Nothing would shock me. I find it interesting. It's not a big deal, but that Bitcoin is kind of breathing here. Why? I mean, Bitcoin, as the market remained bullish, started to breathe here, right? So you had Bitcoin, the momentum started to run out before equities, right? And at the same time, it's almost deja vu. We started to see the same thing happening signal-wise, right? The caution flags started to go up one by one, okay, gradually. And then by February, we were concerned enough that, we wanted to be in a high cash position, right? But Bitcoin was already kind of ran out of steam prior to that. So it led the correction on the way down and then was shot out of a cannon in April and led on the way up, right? So you got, again, big picture wise, and it may be temporary. I don't know if it's there forever, but you have sharp money in Bitcoin. You definitely have sharp money in Bitcoin. Yeah, you got White House bros in Bitcoin, for Christ's sake. They got inside information. You know what I mean? So they know exactly what's going on. But yeah, again, you guys again, we're throwing out opinions here, Hank. It may have topped. I don't know. I'm being honest with you. I don't know, but it's definitely worth keeping an eye on here. Because even though if equities continue and this kind of loses its luster, might be a tell. Might be a tell. All right, let's talk about names quickly, and then we'll wrap it up. Just a few names out there that have been seeing action. Prior to today, we've been seeing a lot of underbelly action. A lot of activity there. Today we saw it was mostly kind of the same hot names. This name has been unbelievable. This BE. I mean, you're in parabolic mode now. Incredible run. And crazy flow. Crazy flow in this BE. That's been a big winner. What else we got here? What was the other name that was today? It was BE, and what was another one that was catching a lot of action? Just a lot of the names that this was the pool of names that kind of they just littered with buying, and they've hacked. Right? This Neo, if you remember, I don't remember the exact strike. Were they February's or September's? They might have been September's. But they bought like hundreds of thousands of contracts, calls down here at a great spot. I'm long gone out of the Neo by now. I sold here. That's where I sold. So I bought here and sold here. Looked like Jesse Livermore or whatever his name is for a good couple of weeks, and then shot out of a cannon again. But you got earnings coming up here in Neo. What other names? Any other names of recent names? Yeah, I'm trying to think of names that really didn't hatch yet. This name there's a lot of open interest in this name. There's chatter. There's a lot of chatter surrounding the name. It's a utility name. And there was action down here. A few of us played it, caught the gap up, and they've actually been even more aggressive up here. So we should see a move sooner than later off that recent action. All right. So whatever they were targeting, I think they were September sweeps, if I remember correctly. But the recent buying, we should see this thing start to move here sooner than later, if it's going to move off that action. But then, this is another name possibly to keep an eye on. How do I feel about sweeper activity, but it's happening in the dark pool versus lit pool? What is your experience? I mean, I honestly, I can't see your name there, whoever is that, but me, I'm just looking at the order flow through CBOE Trade Alert. Because for me, I'm looking at a specific type of order flow. You understand? I'm not like there's 95, if not higher, % of the order flow. That means nothing to me. Right? In other words, there could be call buyers and put buyers in a name that I'm all excited about a couple orders in, and I'm totally ignoring all that other flow. It's just a certain type of aggressive pattern buying that I like to see. So again, I try to stay out of the weeds of everything else that could be going on. But to your point, that's why a lot of the other flow means nothing to me, because there's so much other crap that could be tied to that. I don't know what that player is doing with all this other stuff. My experience for the type of activity I'm looking for, I can have high conviction. It's a higher probability that there's a directional play there. That's what I'm getting at, right? That's what I'm looking for. I'm looking to have conviction that what I'm seeing is a bet being an aggressive bet on direction. If I don't have that conviction, I don't want anything to do with it. I don't want anything to do with it. I think it could be a $5 million call buyer. But if it's not that type of activity, it could be replacing equity. and is delta neutral, right? Not bullish. So that's why I'm just kind of focused on a certain type of action, and that's it. What else we got here? Unity. No, Unity's been on fire. I don't know if recently you played it, but this name has been ridiculous off the flow. Ridiculous. No, honestly, a lot of these names, I didn't really fool around with a lot of these names. You know, I traded them tactically, but I never really taken a position. Unity, I day traded several times, but it caught a lot of flow. A lot of flow. Just a lot of these names, you know. Look at that. Roblox. You know, this Uber continues to catch action, has been bullish. A lot of these names, I haven't really, for swing trades, I haven't really participated much. UPST. Yeah, there's been an uptick in call buying in UPST of recent here. And you know, again, you had this nice little dippity do here. So, man, you know, the God's honest truth, I haven't really paid attention to the flow much. It hasn't been that significant where it kind of blows me away and I have to pay attention to it, but it was noticeable. Like there's been an uptick in interest. Back here, and that's where that circle is, you had literally a cannon fired back there. I think they were leaps, if I remember correctly. It was this and a firm kind of nailed the lows. But yeah, exactly. Like this is the type of stuff that I think we could still participate in, that we still have time for until kind of we got to get completely out of the way. And what I mean by that is you get these kind of rotation out, and then you see some flow, and like this, and this is a trade. If you remember, like Ronchero hit a couple of them in a few names he likes. Costco, right? Like here, they came in, some sweeper activity, you got a trade, right? And then this happened, right? So we want to kind of avoid this in some of these existing names. You know, I think there's a higher probability of this now. That's what I'm getting at. You understand? There's a higher probability of this now in names that have rallied. Because you got to understand, it doesn't mean it's a guarantee to happen, but it's just a different risk reward. Like I love to look at Oklo all the time, but here's my point, okay? You can't, like for me, you can't weigh the buying in Oklo down here, okay, the same way you're weighing buying up here, if that makes any sense. All right? Here, you had a major correction. All the bulls got thrown out, right? It went dead for 2 months, build a floor, right? You see some aggressive sweeper activity come in. Risk reward wise, you can make the case that, all right, I'm willing to give up short-term profits because there's a runway now. If I like the name, there's a little bit of a runway now where I can give a longer leash to. Now, up here, these dips are shorter, shallower, you understand? So you take these dips and you want this. Like, this is where you want to reward yourself. Thank you. And move on. Because what's going to happen is one of these is going to stop and then roll over. You understand? Just like this. Just like that. So that's what you want to try to avoid. And not necessarily roll over. It could just get stuck here and consolidate, right? But if you're playing options or even the equity, you don't want to get caught in that. You don't want to get caught in that. Now, Madden, to that tone, and you know Madden because you've been around forever, but if we see a new name Madden that starts to catch action, right, initial activity that hasn't hatched yet, like that's a name you can be more inclined to give a longer leash to if you want. Right? Because there's nobody in it. So that's kind of how I'm looking at things now. But for trading purposes, These, I think, again, we've been talking about it on Sunday, as you know, during the week. These, I think you still want to fire if you like the spot. We all have different spots. We have a preference. For me, it's off a pull or some consolidation, and then there's an uptick in buying again. Just looking for that quick trade. Yeah, you got to, and you want to be patient too, Madden, because like you catch one cheap and it catches enough action. I mean, these stocks are going from like 2 to 15. You sell that quick pop, you feel like an ass. And guys, if the environment's changing here, okay, regardless of a correction, if we start to see a change in the environment and small caps and mid caps start to attract the institutional buying, you're going to see these things act better. You're going to see these things act better. You're going to see more of them, and you're going to see them act better. Meaning they'll have long runways, some of these newer names. Not these just short-lived pops. Because again, it's a different environment. We were primarily in a defensive bull market where mega caps, it was all about the mega caps, all about the $500 to $1,000 stock. These smaller cap names, even mid caps, flash in the pans. You would have a short squeeze, and then that's it. Now, we've been seeing a different type of price action because the environment has changed. Yeah, well, that's what I'm saying. Like Aklo, you're already in and you're already holding. You understand? And that's a completely different story. That's a completely different story, right? Than buying up here and looking for a whole new bull run from 70, 80 bucks now. That's a completely different story. GoPro, I own GoPro. That's another one of those names that I own. I own some GoPro. Up a little bit on it, but I'm still in it. They hit April calls, I think it was April. So caught a lot of action. Let's see if they come after it again aggressively, kind of like they did with the Neo, or they did. There was so many of them. What's the other name I'm thinking? There was another name where they just bought crazy amounts. What the hell was the other small name? It was Neo, and there was one more. Recent. Can't think of it. It was like hundreds of thousands of contracts. But, that's what caught my attention. They bombed this GoPro. They bombed it. And, it's a dollar stock. This thing's a lotto call buy at this point. So we'll see what happens. Let me flip up here, go through some of the names you guys are talking about. Oh, OPAD was another one, right? Yeah. That was crazy action. Oh, my God. Oh, this OPAD. Forgot about that. Jeez, Vince. They chased this one into strength, too, right? I think this was. This the one I'm thinking of? OPAD? Yeah, this is it, right? My goodness. Crazy. ONDS, that's another. But what was one recently, similar to like Neo and GoPro? They came in and they bought the living daylights out of it, and I played it. I don't want to look through my account. It doesn't matter. But all these names. They started under $1. Under $1. But they came after this thing aggressively. Up here, too. Huge winner, man. Huge winner. Yeah, BE, we spoke about, Mike. That's been nuts. But I'm talking about one that just kind of hatched alongside Neo. Was it a Bitcoin miner, maybe? I don't remember. No, maybe not. Oh, by the way, the Bitcoin miners we've been talking about, I'm not talking to STEAMROOM members. I know you guys are probably deaf in one ear about them. But those of you on this webinar, what about those moves? I mean, that was kind of the lagging group of them all. So this guy exploded off the news, Wolf. Irene's another one, but there's one more recent. Don't worry, because we'll be at it all day. You don't have to guess. There's so many of them. So this Wolf exploded, and I sold Wolf. I still got runners in these things because longer term, I don't know. I want to hold some exposure in these things. I just sold Hut. I think this goes higher too. I really do. But again, this is just some of the stuff I got to clean up. You know, I got to clean some of this up. I can't just keep holding on to everything thinking it's going to go higher, and then you get caught with a bunch of weight. So I'm out of Wolf now. I'm out of Hut. Of the key positions, I got runners in them now. Yeah, this looks good. This is Trump's son too. I think Eric Trump is in it. So here's a little one they've been buying. Hive has been creeping up. HIVE. There's been a lot of buying in this name, and this was my second biggest winner in the Bitcoin mining run a year ago, whenever that was. Wolf was my best percentage wise. This was my biggest dollar wise bit year. This run here. But look, you got this consolidation here. Right? Hasn't been doing a damn thing. And you got some December buying stirring up. Not the best looking December buying. They're out of the money. They're the 20s, but they're putting decent money behind them. So kind of a laggard that hasn't hatched yet for anybody who may have an interest. The other ones have all kind of popped at this point. Irene, yeah, we looked at Irene earlier. They reported, oh my God, that's higher now? It was kind of flattish. What'd they say? They must have said something. What a beast. Irene's such a beast. Yeah, this was one of the early ones, and this one too, Cypher. They guided big. Yeah, these are just, these have been great. These have been great stocks. You know how much action this Irene caught? You guys don't need me to tell you. This Irene, they bombarded this Irene. Yeah. CLSK. Yeah, I haven't seen too much action in CLSK. Is that a Bitcoin miner too? Or they do something different? I haven't seen a whole lot of action of CLSK. Let me scroll. Oh, sorry, I see some other names. CX. This is a slow name, but this thing is going higher, in my opinion. You understand? This is the problem why I never played it. Oh, this is the name, guys. Who said it? CX. This was the name. Who said that? Let me track him down and give him a high five. Who said CX? I just saw it. What did it? Who? Peepo. He didn't even mean to. Do you still believe in CX? This was the name I was thinking of that they bombarded. All right? So, I mean, this is what CX does. This is the reason I didn't end up buying it. I still don't own it because it's so slow. It's just a slow stock. You got to sit and wait. I mean, but look, already percentage-wise for this thing, it's not bad. Now, it's not, it's not collecting Solana or Ethereum, so it doesn't have the hype that these other things have, but you're talking about a real name, This is a real rotation, rate cut beneficiary name. cement. It's Mexican, yes. It's Mexican. But this is your pure rotation name. Pure rotation name. You know? But this is where they started buying it out of this consolidation, and they hammered it. I mean, hammered it. Hold on. It was right before earnings, right? Earnings. Yeah. So it was a little before earnings. And then after earnings, they added, if I remember correctly. Oh, Madonna's all over it. Madonna's got commentary all over the place with this thing. Here. Here's that top OI position. 95,000 Jan 9s. That's the line. Here. 40,000 of those Jans. Bought yesterday, another 40,000. So this was on July 23rd. Where is that? So right here, exactly. Yeah. People, you saved me racking my brain. It would have been going on for hours. But yeah, again, people, it's slow. That's the problem. It's just slow. You know, it makes a 2-day move and then it comes in a little bit. All right, chops around, then goes higher. This is what you get. This is CX. Just slow. So you got to try to be patient with it. Madden's talking about Aunt Jemima. It caught some nice action, I'm not going to lie. The problem is, where were we off the initial activity, Madden? You may have liked it. Me, I was nowhere to be found. That's the problem. But other than that, you can't complain about the action. Here. May put selling. When was that? Oh, that's a while ago. I'm too far back here. Hold on. Is this it? Repeat buying actually so decent. Yeah, this is it. Jan. Oh my God, look at that order. I love that order. I love that order. Jan 50-cent calls, deep in the money. Oh, that was the initial buy and I didn't play it? Shame on me. July 1st. Right here. How did I play Aunt Jemima? Shame on me. I think I did play it. I just got out of it. I think I did play it. 50 cent. Now that I'm thinking, I think I did play it. I just got out of it, per usual. Anyway, that was the initial buying because I remember I put it on the top bet list. And what they bought here now recently, they went out a little bit further. February 13s. And it wasn't bad looking. You know, a little different type of flow out of the money. But, oh, they were Jan 5, not 50 cent. What are we talking about here? Oh, no, never mind. Scratch that. I'm making everybody dizzy. Here's the order. The February. Not a bad sweep. So, again, Madden, when you see a chart like this, I'm the wrong guy to ask about it. You know what I mean? All you need to ask me about is the action. It's legit. It's legit. But me, like, I see this move off the initial buying, and I can't get myself to buy a stock that tripled off the initial buying. My brain can't function that way. You know, but I miss out on those winners that keep going. No doubt about it. Yeah, I don't chase and I miss out on winners. I can't deny that. What other names? Yeah, so there you guys say, see, you guys help me out with names. AG. Oh, this is a silver stock. Again, slow, but it's okay. These things have been fine. They catch decent flow. They've all been bullish. The best name, let me give you some of the recent flow. What's the one? Hold on. Let me think. AEN. This has been the best name flow-wise. AEN. Then you got some of the more speculative names that catch flow. This one has had flow. NEN. This is another quality flow name. NEN. But, look at these things. You see? They've been unbelievable. They've been unbelievable. So the more speculative miners that move slower and lag, they've been still seeing flow. Here, like GFI, they've been rolling, but they still are sticking with it. Any other name recently? I don't think any new names that I know of. I'm still holding a lotto ticket miner. I've been holding, it feels like forever. It's BGT? No, BTG? Yeah! I thought it was going to take me an hour to figure it out. I still have this. So little by little, it's been perking up. I got it from down in this neck of the woods. This neck of the woods last year. So it's one of these gold miners I tucked away when I made a play on the whole group. This is the only one I got left. SSRM. That was one silver one, right? Or is that gold? SSRM. Oh my God. Yeah, SSRM. This caught a lot of action. Struck, right? SSRM. That's the one. Yep. So to answer your question, AG, it's a silver miner. It's fine. But you have a lot of other names that caught a lot more action that have been acting better. But if you're in it and you're profitable on it, I would just hold it. No reason to get out of it. No reason to get out of it. What other names we got here? VFC. This is a rotation name. Caught a little bit more action today. Heavily shorted retail. It's retail though. You know what I mean? It's retail. It's tough to get excited about. But there's been flow. There's certainly been flow. Some of the others, like if you're looking like rate cut wise, these are the names that can explode. Wayfair. What's the other one? I can't remember the other one. Anyway, Wayfair, this name sees flow. This is RH. Thank you. That would have been 6 hours. RH. Like if you want high risk, high reward, I think rate cuts, those, and to benefit off rate cuts, these are the type of names that I've seen these names dead and buried. I've seen RH buried alive and then come back to life, like right here. Look. Okay? RH buried. Look at this. Buried, dead, RH is done. Don't even look at it anymore. And then, bloop, and then you had COVID, obviously, and then that came back. It came back. Look at this. So now you got this name, RH. Look where it is now. So this is like, it looks to me like VFC, they all look alike to me, these names. I think this one's in a little better shape, Wayfair, I think. We've seen flow in Wayfair. We haven't seen any flow in RH recently. But a lot of upside if they get their act together. Yeah, the tariffs have been an issue, but is that already priced in? And do you get beyond that point? Right? That's kind of why these stocks have been banged up so bad. There's a lot priced in. But they're tough, KD, no doubt. They're tough. These are tough names. I don't get excited about these names, guys, because I hate bag holders. You guys know, like, I like newer setups that don't have this supply overhead. Because it takes a lot of time to work that off, usually. But, again, to me, it's all right now. To me, it's all about the activity. I'm not going to lie to you. Like, for me to play a name outside of just like a quick trade, which a lot of stuff I may day trade or flip the next day, it's got to catch notable activity. Like GoPro caught, ridiculous activity. Like, that's kind of my parameter right now to keep me in check. Because, I was pretty sloppy through a lot of this bull market. I'm buying IPOs that are catching small sweeps. I'm buying all sorts of shit. But that's okay. I want to be sloppy and more aggressive when the environment allows for it. But I got to tone that down now. I got to tone that down. So for me, I only want to play off the most aggressive action at a decent spot. That's kind of what I'm solely looking at now. And again, once we get some digestion or correction, then I'm ready to go again, as you guys know. I'm ready to go. But it's hard for me with it, like, you see, with this, it's hard for me to. I can't get sloppy down here like this. I can't get sloppy. Again, we don't need a major spike. I would like one when that time comes. We could just have like an interim decent spike, but it's got to be larger than this. This is not going to get the job done. Because what happens is you get a rebound like we did, or short-term sentiment, bull signal, you get a quick rebound and it's done. You understand? That's it. Like this here, this was the pull. What? This was the pull. Where's my drawing tool? Right? That was it. And you got that little blip in correlation. That's nothing. You want one of these bad boys. And what that would result in, okay, just if you're wondering what that would look like in the price action, is this, more than likely. Something like that. That's it. That's it. That's it. So at the least, that is what I'm saying. At the least, that for me to kind of get a little looser than I am right now. WBD. Oh yeah, we saw some action in it today. Again, this is it's a rotation play, but it's a tough stock. I mean, again, I can't get excited about WBD, Patrick. I can't get excited about this. You understand? But don't let me talk you out of it. It caught some action today. It wasn't spectacular, but it was legitimate bull flow. But for me to like have an interest in Warner Brothers right now, they would have to annihilate it. They would have to do what they did to CX. They would have to do what they did to Neo. They would have to do what they did to Irene. You know what I mean? They would have to do something like that to get me excited in this thing. Yeah, it's just, again, it's a rotation name. You got that going for you. You know, it's just, these names, they're tough to get excited about, man. You know? What's the other one? Comcast? What's that been up to? Oh, yeah. You know, Patrick, this is root canal. This is tough money, hard money. You know, I can't go after hard money. I get frustrated too easily. Yeah, they are, Patrick. They are in the same exact boat. Same exact boat. Speaking of Nancy, VST caught a bomb earlier this week. A bomb. Now, again, you know my opinion on these things. Okay? This is not new. I mean, you look at VST, and those of you in the steam room know how big of a VST fan I was. Even before Pelosi, she can't take no credit for VST. Right? She came after the fact. Sahil will tell you. Sahil and I were talking about VST when we still thought it was a freaking energy name. I thought it was a energy driller or some shit. But, you know, this has come a long way. But look at the bomb it caught the other day. Okay? So again, you can make the argument. I think they were December's. What we were talking about earlier, if you want to trade out of it, you had this. Right? They come in with a bomb. You know, maybe you get a trade out of it. Maybe you're going to push the new highs out of it. I mean, new highs are right here. It's not that far away. But look at this. Look at this order. Again, VST has caught bombs. You don't want to know how many back in the day when it first came to life. Here. Pelosi sweep. Where is it? Oh, here it is. Look at these things. December 200s, 3 million, 1,600,000. Whoop. This is a name that used to catch no flow, guys. Nothing. When we first started seeing sweepers in VST, you know, it stood out like a sore thumb. This thing never caught sweeper activity. Yeah, and TEM too, she can't take credit for exactly for you. Here's the top bet list from earlier in the week. Oh, I played this KNX, but I got out of it. It's gonna end up popping. I know it's gonna end up popping. But I looked for follow through the next day. I should have held this. I had a little bit of stock, nothing crazy. So I day traded the KNX off the sweeper activity. I had some cushion in it. Instead of taking that profit the day, I held it overnight. Maybe it catches an upgrade or something. And it didn't. And I got out of it. It's still right there, basically, where I sold it or whatever. Here's the sweep. September, short term. Decent order, you know, spec order. But watch, it'll probably catch news and I'll be sick to my stomach. Here was the Hut bet. Again, this thing caught big action, Hut. But this is when it was 25, right? And what did it get to? 27 now? 26.60. That was just the other day. And that's that gold feels I was talking about earlier. But the ZST action, insane, man. All right. So that was on, just so you know, August 26th on VST. Here. So, yeah, right where I marked it. All right. So, you know, maybe you get a test of highs. I mean, it wouldn't shock me it goes to new highs, but I personally would be careful with these things up here I think they become choppier up here at the least. I could be wrong, but I think they become choppier. Yeah, they've been in KNX and have found the success in KNX. That's why I try to hold it for an extra day. Because they've been, I think if I remember correctly, they caught an upgrade. They bought very similar to the action, and then I think the next day caught an upgrade, ran like two and change, and I sold it. I happened to hit that nice. This, I didn't catch the news the next day, and I got out. So it wouldn't surprise me if it shows up at some point. Yeah. Oh, this is a tranny, a trucking name. You know, so you can have a lot of these. That's why I think, like, no matter what, I just think like a lot of this market still, you know, has a lot of more bullishness to be had. You don't want it all at once, right? You guys, you want corrections. Corrections are bullish. Trust me when I tell you. Corrections are normal and they're bullish. When you don't get corrections, that's where you get into trouble. You need corrections. You need to keep players honest. You need to hose them down every few months. You know, now there are periods of time where the market doesn't correct because people don't believe in the rally, you know? So the market forces them to believe. It forces them in. And, you know, you go through 6-9 month period without a correction, but ultimately it's going to come. You know, it's going to come. You want to see them regularly. I keep telling you guys about the late 90s run. Corrections every 3 months, like clockwork, every 3 months. I'm talking about legit corrections. Used to scare the living poop out of everybody, flush them right down the toilet bowl. Right down the toilet bowl. And then ultimately set up the 2000 top, because when that pullback happened, nobody wanted to fall for it. You understand? Everybody fell for each and every correction, got shaken out. That when 2000, that correction happened, nobody wanted to get out. And they wanted to add and keep adding and keep adding, and it blew up in their face. But I just think like this part of the market, RSP, like that's the appeal to me right now. You know, and in order for us to avoid kind of a pretty violent and deep correction, this is where the opportunities have to stem from, in my opinion. You need this to outperform. You know, you need to see outperformance from here. Right? Because even fundamentally, right, multiples are high in the hot stuff. You got a lot of crowded areas there. This is where the opportunity is going to come from. Later, people. Have a good night. And thanks for the CX call out. You saved me there. And, you know, I mean, very easily, guys, you want to hear ideal? You get kind of like a deep seek shakeout where kind of the RSP part of the market doesn't even get affected much. The hot stuff gets hosed down. The NASDAQ gets hosed down. And you buy yourself even more time. You know, this doesn't need a correction, this part of the market. This doesn't need a major correction. So, but we'll see. I will play it by ear, and each and every week we look at all the things we look at, and we reevaluate and come to a conclusion on that part there. Yep, options like OPEX tomorrow. Let's see, maybe we get some rotation back the other way. But you had a lot of things today not confirm the upside we saw in the index. It's like I mentioned earlier. So let's see if we see rotation back in the other direction, and we probably see improvement in the flow and stuff like that. All right. Everybody, enjoy the rest of your night, guys. Thanks for stopping by. And I will see you Steam Room members mañana. Oh, the PCE tomorrow. I forgot about that. Interesting. Very interesting. Thanks, guys. Enjoy the rest of your day.